Hey there, this is Arlissa Pinkleton, educator to trader, and I'm coming to share with you the things that are coming up this week that could potentially affect the market. The first thing we have is on Monday at 10 o'clock in the morning, we're going to have the ISM Services PMI. The ISM Services PMI is the Purchasing Managers Index. This is basically a monthly indicator of the U.S. economic activity, and it's based on a survey of the purchasing managers of more than 300 manufacturing firms. It's considered to be a key indicator of the state of the U.S. economy. On Thursday, then, we don't have any more orange or red folders until Thursday. Thursday, we have an orange folder of the unemployment claims. Unemployment claims is basically the jobless claims that measure the number of people who file for unemployment. Even though there are two types, you got initial claims and continued claims. In general, the financial markets tend to react positively when the jobless claims are lower than they expected them to be. On Friday is when we got all kind of stuff happening. Got several orange folders on Friday at 10 in the morning. The core PPI month over month, the PPI month over month, the preliminary U of M consumer sentiments, preliminary U of M inflation expectations. Let's talk about what all four of those things are. The core PPI is basically the index of finished goods, and is generally what economists refer to when the producer price index is referenced. Things like footwear, soap, tires, and furniture, these are things that are included in the core PPI. And when it's calculated, then volatile items such as energy and food prices are excluded from that calculation. Then you have just the PPI, which measures inflation from the perspective of the product manufacturer or service supplier. Inflation, or the rate of change in the prices for the basket of goods, is one of the most anticipated indicators to gauge the overall health of our economy because it measures the price changes before they reach consumers. Some people see it as an earlier predictor of inflation than the CPI. The University of Michigan Consumer Sentiment Index basically started way back. Is a consumer confidence index published monthly by the University of Michigan. Each month they have 500 telephone interviews are conducted across the U.S., across the United States sample. 50 questions are asked. This is something I just didn't know existed. It's like, and who are they calling every week? Are they calling different people every week? Do they call the same people week after week? These are my questions. This in the consumer sentiment was created and is still published with the following objectives. Basically, they want to assess the near-time consumer attitudes on the business climate, personal finance, and their spending. They want to gauge, near-term and future spending behavior of the consumer, and they're going to judge the consumer's level of optimism or pessimism. Lastly, the University of Michigan's inflation expectations are what people believe inflation to be in the future. These expectations about future inflation matter because they affect people's behavior in the present. These are the things that we have coming up for this week, the week of December the 5th through 9th, 2022. And I'll come back one day during the week and talk about what kind of effect did these things actually have on the markets. Be sure to like and subscribe to the channel. Or check me out, educatortotrader.com or educator to trader in Instagram. Alrighty.